Hey everyone, it's Matt Donahue with your weekly market update with Mission Financial Planners. Last week was Halloween. This week is Election Day. So let's go ahead and jump into it. Today is Monday, November 4th. It's also my parents' 57th wedding anniversary today. So 57 years. If I am able to pull that off, let's see, I married my wife in 2011. So that would mean that we would have to be married through 2068, which means I would be 95 years old. So well done, mom and dad. I'll be calling them later today to say congratulations. Well, let's jump into it. So all that glitters is gold. We're going to talk about gold this week. Gold has had an amazing year. Check out our blog post. We've got a bunch of commentary on gold. We also have some charts that show you how gold has performed in the long run versus stocks and bonds and some other assets. But gold has seen a 30% increase year to date. That is its best performance since all the way back in 1979 when I was a grand total of 6 years old, right? So fantastic year. Gold prices normally work, in a inverse relationship with interest rates, but this year's rally occurred even with 32-point increase in 10-year real rates. So we're not really sure what's going on there. Some key drivers, though, are geopolitical uncertainty, fiscal instability, and investor uncertainty about the U.S. election cycle. So all that stuff is factoring in pushing gold higher. Central banks, specifically emerging banks, are stockpiling gold as they attempt to diversify away from the U.S. dollar. As election results are finalized this week, there should be some clarity that'll help alleviate some of that upward pressure on gold, but persistent fiscal and geopolitical issues and potential monetary easing are going to, maybe make a modest gold allocation appealing. Diversification is the key, though. So long-term investors might find balanced diversification through stocks, bonds, and other assets. Will in the long run have a much greater capital appreciation than if they just went with gold. Some economic updates. It was kind of underwhelming last week. Non-farm payrolls rose by just 12,000, which is way below expectations, and U.S. GDP expanded at a 2.8% annual rate for Q3, which was below forecasts of 3.2%. Fed has a meeting this week, and of course we have the U.S. election. So we'll see what happens, right? Buckle up. It's going to be interesting. Philosophy quote of the week. It's perfect. This quote is just perfect for this week. Not good, not bad. This is from Marcus Aurelius again. Let me read it to you. There is no evil in things changing, just as there is no good in persisting in a new state. The Stoics had a really neutral view on change. It's not good, it's not bad, it's just change. That perspective helps you focus less on labeling it as a good or bad thing and to try to be just more adaptive to whatever the change may be. Whatever happens in tomorrow's election, people are going to be upset. People are going to be election was good or bad. It just means that maybe your side didn't do as well as you hoped, or maybe your side did great. Hey, that's fine. That's fine. What's more important is how you react to it and how you do so in a positive way. Some tax tips, handling big wins. Hey, what if I won the lottery this week? So the election happens, my person wins, my person doesn't win, but I win the lottery. What do I do? What do I do if I'm a gambler and I'm someone who makes money gambling, right? What about those people? Well, a couple things you can do. One is document everything, and especially when it comes to gambling, keep a detailed record of all your wins and losses, because you could lose early in the year but then win later in the year. Well, guess what? If you kept the records from those losses earlier in the year, that's going to offset some of those wins, which means it's going to keep your tax bill down. Report your winnings. Form W-2G is the form that the IRS uses to report. Don't forget you can deduct gambling losses on Schedule A. It is limited though to the amount of your winnings. And then always work with an attorney or a tax professional, especially if you win the lottery or something like that. Do not come forward as having won the lottery without first consulting with a good tax professional, a good certified financial planner, and a good attorney. Make sure you've got a team before you come forward if you're fortunate enough to win. November's long-term care planning month, so we're going to have a big focus on long-term care planning. This week, we're going to talk about navigating the holidays with a loved one who has dementia. There's a lot of this from the CLTC, which is a credential I hold. It's in our blog post this week. You can check that out. But really, here's 5 key things you can think about when it comes to helping that person who has dementia, that you want them to be included in all those family events that are going to come up. First thing is plan ahead, right? Make sure everybody knows, hey, this is the situation. We want so and so to be there. We want them to have a good time and a safe time. So what can we do to make sure that that happens? Simplify it. Make it easy. Make it simple for them. Also, create a calm space. Someone with dementia might get a little overwhelmed, a little overstimulated maybe. Have a quiet place that they can withdraw to so they can maybe gather themselves. Engage with simplicity, right? Include them in simple tasks. Hey, who doesn't like to feel helpful, right? Make sure you include them. If you're just washing the dishes and they're standing there staring at you, hey, grab a towel, dry the dishes while I wash, something like that, right? And then seek support, right? Hey, if people are getting a little wound up or really stressed, right? It's okay, right? It's okay. Make sure you know they're there for them. Maybe even connect them with some other groups that might be able to help them. We have a great relationship here in San Antonio with the Alzheimer's Association. They've done some webinars with us in the past. There's also a great book by Jolene Brackey called Creating Moments of Joy. Okay. So just, hey, you know what? This year has been a fantastic year for investors, whether you were heavily invested in gold or not. But there's been a lot of changes. There's been a lot of opportunities that have happened this year. And guess what? Change and opportunity is going to be coming, whether we want it or not. Remember what the Stoics say. Hey, it's not that the change is good or bad. It is how you react to the change that is good or bad. So whether that change is as simple as rebalancing a portfolio, preparing for tax implications, maybe of an unexpected gain, right? Or just including those people who, they need your protection, they need your help, right? Including them in your family events. A proactive approach can help you make the most out of what's coming up in your life, whether it's a big event or a small event. If you want to talk, hey, we're always here as well. You can always give us a buzz at 888-339-0093. You can also always email us at admin@mfplanners.com. Thanks, everyone. Go vote. Have a great week, and we'll see you next week. Bye-bye.